but that one still works. It just charges very slowly.
Hey guys, y'all forgive me. I have been on call back to back to back for like, I don't know, I think this is like going on hour number 4. I haven't got to eat. So hold on, guys.
You know your lips when you like. These were some interesting chocolate.
Give me just a minute, guys. Would somebody please go in the Guru's chat and the 333 chat and drop the link to this call? Let them know we're on. Yay!
Well, almost. Still can't believe it hasn't broken yet.
Hey guys, welcome, welcome, welcome. I'm so happy and grateful to be alive. If you guys are so happy and grateful to be alive, I want you to drop a 333 in the chat for me. Drop a 333 in the chat. What a wonderful day it has been. And I just like to get these meetings started off with a little bit of jive. My computer is not quite so mad at me because I closed some windows out, guys. I will have 50 windows open. And while our intros...
What are the 2 most powerful words in the English language? The 2 most powerful words in the English language are I am. Because what comes after I am will shape your life. What you speak after I am, what you believe after I am, will control your decisions and shape your life.
I am powerful. Whatever I want to achieve, I believe that I am capable. It's all attainable. And what you speak after the words I am will shape you. Those words will really make or break you. So be careful what you're saying every day. You don't let the negativity come in and take you. Stay strong and positive and you will make a breakthrough. The 2 words I am are so powerful. So if you say that you're stuck and you're stressed, then you are. But if you aim for the stars and you shoot, you go far. It all comes from within. Just think about it. If you believe that you're great, you will attempt great things. When you affirm I am strong, you know the power that brings. The words will shape you in a powerful way. Make sure every day look in the mirror and say, oh yeah! Oh yeah! I am powerful. I am a beast. I am a warrior. I am unique. Oh yeah! Oh yeah! I am powerful. It's not just a phrase that you say. You've got to feel it, believe it. You've got to scream it and be it. Repeat it every day. Don't let your power go to waste. Use this information and write your affirmations. Turns into incantations. Unlock your hidden power. Affirm I am amazing. This is your recreation. No more procrastination. Now there you're empowered. You're no longer unconscious. Let the words I am seep into your subconscious. You've got so many options. I am anything and everything I wanted. The 2 words I am are so powerful. So if you say you're depressed and you're tired, then you are. But if you say I'm great and believe, you go far. It all comes from within. Just think about it. If you believe that you're great, you will attempt great things. When you affirm I am strong, you know the power that brings. The words will shape you in a powerful way. Make sure every day look in the mirror and say,
guys. So, everybody type in the chat. I am a successful trader. I am a successful trader. I am a successful trader. Yes. Yes. Okay, guys. So tonight we are going to get started with support and resistance. This is the absolute fundamental foundation of everything that we are going to build upon. Okay. Did everybody get their TradingView account made last night? www.tradingview.com. I swear, sometimes this thing runs for me. There we go. Excuse me, guys. I apologize. Yes. All right. So, Forex. Sorry, guys. All right, guys, get your notebooks out.
Welcome everyone, my name is Cody Sell, and in this video we're going to be taking a look at support and resistance. Now this is going to be an introductory video for many of you, and we're going to be going over what exactly support and resistance is from a conceptual standpoint, and then we're going to be moving forward and taking a look at what it actually looks like in a real financial market, how you can spot it, mark it up, and then use it to trade. And this is going to be an introductory video for the entire series of videos on support and resistance. Now, I've got us pulled up on EuroJPY, but before I can take you all into the actual market, we have to take a look at what support and resistance is from a conceptual standpoint. So I'm going to pull us out of the market for a second so that we can take a look at that. All right, so I want you to imagine that you are in a hallway. So here is our hallway right here. All right, we have our floor right here. And then we have our ceiling right here. All right, so we're walking down this hallway, and I want you to imagine that you're bouncing a bouncy ball down the hallway. Okay, now I want you to imagine that you bounce this ball against the ground as hard as you can. So you throw the ball at the floor. When the ball hits the floor, what is the ball going to do? Of course, it's going to bounce up, and because you bounced it really hard, it's going to bounce up all the way to the ceiling. Now the ceiling is stronger than the ball, and what's going to happen is when the ball hits the ceiling is going to repel the ball all the way back down to the floor. And if you bounce the ball hard enough, it's going to keep going back and forth until the end of the hallway. So imagine that there is an open door right here at the end of the hallway, and when the ball reaches the end of the hallway, it bounces right out the door, and because there's nothing left to repel it, it bounces right on up past the ceiling and continues on to the upside. This analogy of you walking down a hallway and bouncing a bouncy ball against the floor and the ceiling is synonymous with how price moves in the financial markets between support and resistance. So what we're going to do now is we're going to change the word floor to support. And we're going to change the word ceiling to resistance. And what we've got now is price moving in between support in the market and resistance in the market. So what happens is price will come down to a level that has historically acted as support, that price then bounces from all the way up until it finds a level that price has historically rejected from. It's been held at. And then from there, price moves back to support. And thus you have the saga in the financial markets where price is consistently and always moving between some kind of support or resistance at all times. So if you can understand this conceptually, it's going to help you tremendously on your trading journey to understand that at any given time in the financial market, no matter what pair you have pulled up, no matter what day it is, what time frame it is, what you're doing, price is moving between some kind of support or resistance. Now, there are a lot of different kinds and categories of support and resistance. In this series specifically, we're taking a look at horizontal support and resistance. But what we're going to see at a later time is that there are many different types. So just to clarify, in this video, we're looking at horizontal support and resistance. And when we say support, what we're talking about is a level in the market that has historically supported price. And when we talk about resistance, what we're talking about specifically is a level in the market which has historically rejected price or pushed price down. So this is fundamentally what support and resistance is. Now let's go back into the market and see if we can identify real support and resistance in action. All right, so now we're back on Euro JPY. We're going to look at applying that information to the real charts. So let's start off over here on the left-hand side of the chart and take a look. Do you notice how over here we have a peak in the market? So we were rising over here all the way up into this area, and then we began to fall. That's a peak in the market. Price came up to this point and rejected several times. So let's get rid of this. Let's circle this area here. And then let's make note of this right in here. All right, this was some kind of resistance over here. Now we continued down at that point. So once we found our resistance here, we continued down. And from this point right here, we had a valley in the market. Price rose from here. It did a few things in the means. It came back down to the same spot, rose back up, came back down to the same spot, rose back up all the way to our resistance right here. So what we're going to do is we're going to note this valley right here where price found support. We're going to note this valley right here where price found support. We're going to note this valley right here where price found support. And we're going to get rid of this. And we're going to add another line down here. Now notice that price found support once, twice, 3 times. Okay, so what we've got down here is a support. All right, and we will put this here, put this over here, and pull this over here. All right, this is our support line down here. All right, and I want you guys to ignore everything to the left of this for just a moment. We're going to get back to this in just a moment. Focus on these circles and understand the concept here, just the simple concept of support and resistance. And over here, where we found resistance, and it's one big circle, but really, if you look, there's 3 arrows here. We bounced once, twice, 3 times, 4 times, actually, 5 times. There's a lot of instances in here of resistance. So we're going to now call this our resistance. Okay, so often here we've got our hallway here, our 2 blue lines. That's our hallway. We've got our bouncy ball right here, and what's the bouncy ball doing? Comes up to the resistance, comes down to the support, comes up to the resistance, comes down to the support, comes back up to the resistance, comes down to support, comes back up to the resistance, etc. Just like we had talked about before. Price is simply moving between this resistance formed here and the support formed over here. And so sure enough, over here on the right-hand side, when we come back up to our resistance level, what does price do? Of course, it falls from the ceiling back down to the floor, just like that. And then, of course, once we're at our support, what does price do? Finds support, continues to rise from this area all the way back up to our resistance over here on the right-hand side. Okay? There we go. Right there. Okay. So this is a basic understanding of what support and resistance actually looks like in the market. Now, I want to take us back out of the market for a minute to explain some more details about support and resistance that will help us in understanding how they actually work and how we can use them and identify them in the real markets before we carry on here. All right, so we're back over here at our conceptual example where we've got price moving in between support and resistance in the markets. And what we're going to talk about now, some characteristics of support and resistance. So, characteristics of support and resistance. So the first thing that you need to understand is that support and resistance are not actually different. They're actually the same. The only difference between a support or resistance is actually just simply where price is. Because, and this is important, so make sure you take note of this, when support breaks, it becomes resistance. 2, when resistance breaks, it becomes support. Okay, now what does that mean exactly? So let's come back to our conceptual example. Price was moving in between our boundaries, in between our floor and our ceiling, in between our support and our resistance. But then at the end of the hallway, when the door was open, there was nothing left to push the ball down, and so it bounced straight through and above the ceiling, made a higher high. Once price breaches a resistance, so when this breach takes place right here, this level right here is no longer acting as a resistance. Now what's going to happen is that it's actually going to act as a support. because now that price has breached the resistance and is now above the resistance, price will come back down and it will act as support. And a new resistance will form somewhere up above somewhere else. And so we will end up with different boundaries now, like so. This is how it works. So let's go back. Now, similarly, when price breaches a support and is now beneath the support, that support is now going to act as resistance. So we will end up forming a new support, and our old support will now actually become our resistance. So when we talk about support and resistance, we're not talking about support or resistance. We're talking about support and resistance, because in all actuality, this support down here is a support and a resistance. This resistance up here is a support and a resistance. The only thing that determines whether the support or resistance, or in short, S&R, that's what many traders refer to support and resistance as S&R. The only thing that determines whether an S&R is acting as a support or resistance is simply just noting where price is relative to your S&R. So it's pretty simple. If we go back to our original hallway example, if we take price and we move it over here, this support and resistance level right here will be support. Also, this support and resistance level down here will be support, because it is also beneath price. So when price breaches this support is still beneath it. It can still find support here. However, if price is in the middle, this support and resistance level is support. This level is now resistance. And if price is down here, this support and resistance level is resistance, as well as this support and resistance level. They are both resistances. They are both above price. Price may come up, find resistance. If it breaks through it, it will come up and find resistance. They are both acting as resistance because they are both above price. Now, there is one other important thing that you need to understand about support and resistance, which is that support, and we're going to call it S&R for shorthand, and you're going to hear that a lot moving through the rest of the material in the education platform, is a zone, not a solid line. Often depicted as a solid line, though you must understand conceptually it is actually a zone. And we're not going to get too far into that in this video specifically, because we're going to save that for a different video to really detail that out, but still worthy of noting here for our key characteristics.
Hey guys, I want you to write that down. Characteristics of support and resistance. 1, when support breaks, it becomes resistance. 2, when resistance breaks, it becomes support. And 3, the S&R is a zone. Very important, guys.
Of support and resistance. So now that we've covered some of these really important concepts about support and resistance, let's go back into the market and see what that looks like in the actual chart. All right, so here we are back to our previous example. And earlier I drew this box over here and said, don't worry about that. But now we're going to take a look at that. And so let's just come on over into this area. Now, the first thing, you see that not exactly, there's a little bit of a gap here, but as price came up to this zone, which we'll talk about in later videos, we saw that price did what? Price came up to the resistance, because keep in mind we're below the level, and then dropped. And then price came back up to our resistance and then dropped. And then price came back up to our resistance, dropped, and then finally broke through and then went on to create a new resistance in the market. But what's important here to understand is that this level that we earlier identified is a support level over here. Previously, it was acting as what? It was acting as resistance. Let's get rid of these blue markings here and this arrow. So here we have our first example. What started as a resistance level then became a support level once it was breached, which is why all of these levels are called support and resistance levels. Over here, we have a resistance in the market. Let's see what happens when this level is breached. Here we go. So price breached through our resistance, came back and found support, and then went on to a new resistance. So you can see here again, yet another example of resistance turning into support. Now this is constantly going on in the markets, and if we come back over here to our main hallway, our main ceiling, our main resistance in this example, and we start to take a look, there are other support and resistances that we can look at. So for example, there was a support right here in this area. So we have a support. And then what happened, the support breached, price, you see the green candle here in the wick, came back up. And then what was previously support then acted as resistance, and we fell. So right here, we have resistance. And then note this, look what happens when price gets back up to this level. So again, we see what was once acting as support is now acting as resistance. You can see it again down here, another example. You have resistance right here. I have a resistance right here. As you can see, price came up to this point. Let's get rid of this blue line here. Price came up to this point and then dropped very hard. Now, the next time price came up, found a little bit of resistance, but ultimately it broke through. Now, when it broke through, what happened? It came back down, and now this level acted as support, and then we come back up to our next resistance. So here we have support. Now this video was designed to give you a conceptual understanding of support and resistance, how support becomes resistance, how resistance becomes support, how they are in fact one and the same. And the key takeaway from this video is understanding how price moves specifically between horizontal support and resistance.
Hey guys, any questions? You know, I keep the chat open. So while we're going through this, if y'all have any questions, drop it in the chat. But I mean, the way these guys break this down for us is so amazingly simple. Like, I would have gave anything to have found this program when I first started trying to learn to trade Forex. Edgar, these are in your back office under education platform.
All right, welcome everyone to another video about support and resistance. In this video, we're going to be diving really deep into the conceptual understanding as to what exactly support and resistance is. We've talked about it previously, and I'm sure many of you have heard about the concept of support and resistance before in the financial markets, but the purpose of this video is to actually show you why support and resistance forms. That way you have a deeper confidence in what you're actually doing in the financial markets, and that's going to improve your trading and overall profitability. So we are going to end up in the charts a little bit in this video, but of course, before we do that, I'd like to take us right on out. All right, so let's say we've got a resistance up here at, let's just go ahead and type this in here. Normal 2 coordinates, let's say 1370, right around there. So we have a major resistance at 1370. Now, we've got price is moving along, comes up to our resistance and falls. Comes up to our resistance and falls. And yes, of course, there's a support down there, but right now, I want you guys to focus on this resistance. Comes up to the resistance and falls. Now, here's my question to you. What causes support and resistance? What causes price to come up to this seemingly random level in the market and continue to find resistance and bounce away? What is it that's causing that? So I'm going to give you a couple seconds. Think about it. Think about some ideas. Maybe pause the video for a second.
Guys, what do you think? What do you think is causing support and resistance? But what makes price move? Anybody want to guess what makes price move? Yes, but what causes the supply and demand? All right, guys. Oh, well, okay. I will tell you, I've done many trainings, okay, for Forex. And never, ever have I been told what causes the fluctuation in the market, what causes price to move like it does, what actually causes support and resistance. So he's about to tell us, and it's just really an eye-opener.
The answer to what's causing support and resistance in the financial markets is supply and demand. Now, supply and demand is the underlying factor that drives every single piece of technical analysis, every single price movement. It's the reason for everything. People may see something in the market and blame it on news. They might blame it on politics. They might blame it on a technical analysis pattern. They might blame it on buyer sentiment. At the end of the day, every single move in the financial market is due to supply and demand. And it's so important that you understand this from a conceptual, fundamental basis. That way you can grow from this and truly understand what you're doing, because most people, especially when we talk about retail traders, they just don't have the grip on the market that they need to be successful. So support and resistance is caused by supply and demand. Support and resistance is supply and demand. They are actually the exact same thing. So what exactly is supply and demand? How does it play out in the markets? All right, so first I want you to imagine that there's a large investment bank. So there's an investment bank, and this investment bank needs to move $100 million. All right, now when you have that kind of transaction going on, you can't just place $100 million of order at one time. So what they have to do is split this order up into several different orders. So instead of placing a $100 million order, they may place a $20 million order 5 times, or they may place a $50 million order or a $10 million order and split it up into smaller pieces. The reason why they have to do this, so let's go ahead and pull out our line tool here. And let's just say that right here at 1340, let's go in here. So 1340, and make this our, here we go. Right here at 1340, they want to fill this order for 100 million, okay? So the way this works is price will be moving along here in the market, and then it'll reach the 1340 level. And when price reaches the 1340 level right here, part of this order is going to get filled. So let's say overall they want to fill 100 million right here. Let's say they had an order for 25 million. All right, they had an order for 25 million. Now, when this order actually fulfills, what's going to happen is it's going to cause price to shoot up. All right, so when they click buy for $25 million, it's going to cause the price to rise because there's more demand caused by this investment bank. Guys, one thing you have to understand, and we're going to dive a lot more into this. It's honestly more advanced than you need at this point, but general concepts here, the financial markets are controlled by large players, by key participants, institutional investors that have so much money that it causes the value of assets to change. So when they place an order for $25 million, price rises. Let's say price rises up right to this area. Okay, so price rises. So price rises up to here. Now, here's the question. When price rises up to here, when price rises and we're up to here, are we down here at 1340 anymore? No. So what this is called is, go ahead and pull this over here. This is called slippage. So slippage occurs when you carry out a transaction that has so much volume that it actually causes the market to move. It causes price to fluctuate away from that point. And so when that happens, the institution has two options. Either they can continue to place orders or they can wait for price to return down to their original price point that we've got marked of 1340. Now, remember and keep this in mind, okay? This is very important. When you talk about like a 5% increase for $100, okay? 5% increase on $100, you're paying an extra $5. So in that case, you might be okay with that markup. But in this instance, when you've got $100 million on the line, a 5% markup is $5 million. So when you start scaling money up to this level, these investment bankers, they can't afford, okay, these hedge funds, they can't afford to continue to fill their orders once slippage has occurred. So that's why they have to split their orders up into several different parts, because it would cause a volatile push in the market, and a lot of their order wouldn't get filled at the price point that they need it filled at, and therefore they would lose a lot of money. So this is the underlying driving factor for actually why support and resistance forms in the first place. So here we go again, price is up here. And now keep in mind, our investment bank has another order down here for $25 million. Again, they can't just fill the other $75 million because that would be too much. It would be too much slippage. They'd lose too much money. Price would rise all the way up here, and they would get, have to fulfill another $40 million up here at a much higher price point, and they'd lose a ton of money. So here's what's going to happen. Price will ultimately come around, and then boom, it will find this level again. When price reaches this level, what's going to happen? This order right here, this $25 million order is going to get filled at 1340. When that order gets filled, it's going to cause price to rise. When $25 million of asset is bought, it will cause the value of that asset to rise. Price will do its thing, and then when price comes back down, what happens? Another $25 million is filled right here. So orders filled right here, okay? So each time price reaches this level, it's filling orders. Now watch what happens, because this is interesting. So we get one more order fill here. Go ahead and, so let's go ahead and mark that right here, okay? We get one more order fill right here. Now notice how at this point we've got $25 million times 4. That's $100 million. So the entire original order that this bank put for the market right here, it's all been filled. So they're done. They're good to go. They have no more orders waiting here at 1340. So what's going to happen now? So price is pushed away, right? When this $25 million order is filled, it pushes price up. What's going to happen now when price returns to this level? There's no more buy orders there. So now what's going to happen is price is going to break this level, retest, and then continue down. So this area down here, I'm going to get rid of this, get rid of slippage, get rid of this. Okay, now these orders down here have formed what we typically call support. Okay, this is what we would call support. Now that makes sense, of course, right? Prices come down, it's found support here, it's found support here, it's found support here, it's found support here, and it's retested as resistance here. So it makes sense based on our understanding of support and resistance why this is a support. However, now you understand why this support level in the market is actually forming. So what I'm going to do is I'm going to change our word support to demand. Let's move this right over here. And then I'm going to change all of this to green. All right, now why did I change all of this to green? The reason why I did that is because I'm going to go ahead and move this down here now. Support is equal to demand, which is equal to buyers. So anytime you hear the word support or demand, you need to think buyers. There are buyers in the market. So in this case, right here at 1340, we had a buyer in the market that kept pushing price up. Every time price got there, there were buyers there ready to push the price up. When you buy, the price increases. Now, that's support. That's demand. What about resistance? What about supply? Well, same thing, just opposite. So we've got our level up here now, and we're going to make, this time we're going to make this red to indicate sellers. Okay, so that's the idea, color coding this here. Green is for our buyers, red is for our sellers, and they are pushing the market back and forth. So again, similar situation here. We've got sellers here, sell orders filled here, sell orders filled here, sell orders filled here, and sell orders filled here. How much? Who knows? Doesn't matter. This could be 10 million. All right, this could be 5 million. This could be 70 million. It doesn't really matter. What matters is that you understand the concept of what's going on here. You don't need to know the exact amount. You just need to understand that every time price gets up to this level, okay, so in this case, let's say it's 30, so 1360. There we go. So every time price gets up to 1360, sellers are coming in. There's sell orders there. They have pending orders ready to be filled. Because remember, our institutional seller up here that has to move $20 billion can't do all of that in one order or two orders or three orders due to slippage. They have to split that up contractually into separate orders, with their brokerage, and then that brokerage will carry out those orders only within a set defined parameter of price. That's what gives these support and resistance zones. All right, so just remember, these guys up here who have these sell orders at 1360, they've got a lot of money on the line. They cannot afford to have their orders executed right here or right here. Okay, right here. They need to wait for price to come back up to 1360 so that they can continue to get their orders filled at the correct price. All right, and what's the result of these orders, this supply and demand in the market? You end up with support and resistance, inherent barriers in price, and you're able to accurately predict where the sellers are going to come in, where the buyers are going to come in, and where you too should be placing your trades. So up here we've got resistance equals supply, which equals sellers. Okay, so this is important for you to remember, take note of. Resistance, supply, sellers. Okay, support, demand, buyers. So supply, those are your sellers. Demand, those are your buyers. So price moves between support and resistance. Supply and demand is what creates that support and resistance. One more time. Supply, that's your sellers. That's the sell-off. Those are your peaks. That's your resistance. Demand, those are your buyers. That's your support. Together, supply and demand move the market. Together, supply and demand create support and resistance. Now that you understand why horizontal support and resistance, because that's ultimately what we're talking about in this case, specifically horizontal support and resistance. Now that you understand why it exists fundamentally, let's talk about something else that's really important. All right, so I've cleared off the screen a little bit, and I want to ask you a conceptual question here. Let's say that you open up the chart and you are right here. So price is right here in the middle between your support, your resistance, between your supply, your demand, and price is approaching this supply zone. Okay, now here's the question. If you look back and you see that price has been here once, twice, 3 times, 4 times, and this is now the 5th time you are approaching this supply zone, do you think that because you have more bounces from this level that you have a better trade, or do you think that you have more bounces from this level that you have a worse trade?
What do you think, guys? You think better? Okay. Worse? Okay. What do you guys think? If you, the more bounces you have off of that resistance line, what do you think? But you're going to have a better trade? Well, let's see.
I want you to think about this for a second. So pause the video if you need to, but I want you to really think about this. Do you have a better or worse trade? Are you ready for the answer? The answer is that the trade is worse. It's a worse setup. And here is why. The reason why it's a worse setup is because, remember, again, there is a certain number that's being filled here. Let's say 100 billion. So $100 billion worth of sell orders are right here at 1360 on the chart, okay? Now, each time that price is visited up here, a part of that has been filled. Now, you don't know what part of that was filled each time. But right here, part of it was filled. 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 And now here we are. And the question is, let me get rid of the billion here. The question is this good or bad for us? Get rid of that. The answer is it's bad, because at this point, we've already visited this level so many times that each time we visit this level, okay, write this down, take note of this, is very important. Each time we visit this level, it becomes more and more likely that all of the orders are going to have been filled. It becomes more and more likely that there are no more sell orders remaining. It becomes more and more likely that this level will break and price will continue on as if it didn't even exist. Why? Because all the orders have already been completed. It goes against your intuition. You would think that the more bounces, the more verification you have for a level, the better it is, but that's not actually the case. You want to work on identifying these levels back over in this zone, back here when you only have a couple bounces. You don't want to be identifying the level all the way over here once it's already got 5 or 6 bounces. The orders are already filled and you're going to lose the trade. The one time you go ahead and decide to enter in on the trade, you're going to lose the setup. And again, this is something that just so many retail traders don't understand because this kind of information is not out there for people. People are taught that the more reactions you see, the better, and it's the exact opposite. And that's why so many people, that's why 95% of these people are losing money because they're taught incorrect information. And when you actually understand what it is that you're looking at on a chart, everything becomes so much more clear. So again, one last example on this. I'm going to clear the screen off. All right, let's go back to our demand zone down here. And let's say we've got $50 million worth of orders to fill. All right, now over here, when price originally got here, they were able to fill 20 million of that order. And then the second time that price got here, they were able to fill 20 million of that order. And then the third time that price got here, they were able to fill the remaining 10 million of the order. And then the order was complete. That was it. So after that, when price got here, there was nothing left. So what would that look like in terms of the candlestick? So let's delete these here. Let's talk about that real quick. So each time this $20 million was filled, price rose back up to 1360, our next supply zone. You can see that right here, and then you can see that right here. But this time, they only filled 10 million because that's all that was left. So the question is, did price make it all the way back up to the supply zone? No. It was half the order, and so it went half the distance right here. So instead, in this case, price stops halfway in between, comes back down looking for more demand, more buyers, more orders to fill to push it up. And if there aren't any more orders, which in this case we have no more orders left to fill, what happens? The level fizzles out like it never even existed, and price will break it, retest, and continue on in the other direction. So I hope at this point all of you fully understand, at least from a conceptual basis, what's causing support and resistance, what's causing these horizontal lines that you're drawing on your chart to actually have weight so that you can have confidence in putting money on the line.
Oh, I just love how he breaks that down. All the years I've been trading in the Forex market, no one ever took the time to explain to me. I mean, I know the trend is your friend. I knew what support and resistance levels were, but actually as far as what makes it move like that, I was never told. Okay, guys, we've got 35 more minutes of support and resistance. Are y'all going to hang with me, or do you want to finish it tomorrow night? Can we go on? And that way we're caught up. Makes sense seeing this? Yes, honey. All right, let's go.
Welcome everyone. My name is Cody Sell, and in this video we're going to be taking a look at how to properly identify horizontal support and resistance in the financial markets. This is going to be a great introductory video for all of you who are looking to use support and resistance in your trading. So, of course, like always, we're going to come out of the charts for a minute and look at conceptually what we want to see in the live markets before we actually tackle the chart. All right, so let's say we've got our support and resistance level right here. And what we're going to do first is talk about what you would expect to see at a support and resistance level. So here's our price feed down here, and we are approaching our support and resistance level. And since we are currently under the level, it is called what? Resistance. So we have approached our resistance level. What would we expect to happen? Well, we would expect the price will hold and be rejected back down, perhaps to a support level. So we will mark another level down here, and we will call this one our support. All right. So the first thing we've noted is that, let's just talk about this here. Price has rejected from this support and resistance level. So that's the first sign that we've got a support and resistance level. Price was rising, rising, and rising, and then we saw a peak in the market. Price fell very hard from this point. So now we're going to be watching price when it gets back up to this level. So price finds support, comes back up to our resistance. We would expect to see it fall again, right back down to our support. So we can now confirm that price is indeed being rejected from this level. Now, when it comes to support and resistance, we like to see a little bit of confluence here. So in this specific example, we now have two instances telling us that there is some kind of resistance here in the market. You need at least two instances to inform you that there is indeed potentially a significant resistance in the market that you can use to trade and make money on. Right now, in this example, for our support level, we have 1, 2, 3, and now we are waiting to see what happens here in instance number 4. But note this, guys, also on the support level in this example, it was previously resistance. So we have a second indicator here that this is a significant support and resistance level in the market. So resistance has turned into support. All right, that is another key identifier for support and resistance. Now let's say that at this point, price does indeed find support here. We come back up to our resistance, fall just a little bit, but then break through the level. Now, if we're trying to identify key characteristics about support and resistance, what would we expect at this point? We would expect that price will return to the previous support and resistance level and now find that that resistance has now turned into support, and we will rise again. So here we are. Other key telltale signs that this is indeed an important support and resistance level in the market. Now, when we discussed conceptually how support and resistance worked, we used an analogy of a bouncy ball in a hallway. And we talked about how the ceiling and the floor were much stronger than the ball, therefore the ball bounced back and forth. So the idea is that these support and resistance levels are very strong. So in order to break through a ceiling or a floor, there would have to be a lot of force. That ball would have to be very strong. It would have to be moving very fast. There would have to be a lot of momentum for that ball to bust through the floor or bust through the much stronger.
Y'all take mental note of that so that you never forget what he says, okay? For the ball to bust through the ceiling or floor, it's going to take a lot of momentum, okay? Just remember that.
Ceiling. So when we talk about support and resistance and being able to identify it in the market, what we'll typically see around these levels, a strong candlestick that represents a lot of momentum because it takes that to actually break through one of these levels. So we don't want to see small candlesticks slowly going through the level like this. We want to see one, maybe two strong candles busting straight through the level and then continuing on slowly. That's what we want to see, because what this right here tells us was that that was indeed a strong level in the market. It did take a lot of momentum to bust through that, and we can rely on that information to trade it in the future. So to summarize all of these concepts, we've got key support and resistance, or S&R identifiers. All right, let's move this on over here. So the first key identifier that we talked about was bouncing. So you want to see that price is bouncing from a level, whether it be as support or as resistance. Either way, you need to see reactions. So bouncing / reactions from that level. The second key identifier for support and resistance is that you want to see that that support or that resistance becomes resistance or support. So you need to see that not only will a level act as support, not only will it act as resistance, it will act as both support and resistance. That tells you that that is a reliable S&R level. It's an important key barrier in the market. And the third thing that's a telltale sign for a significant support and resistance level is seeing strong price action, strong candlesticks, a lot of momentum required to break through the level. So momentum is the third key.
Okay, guys, write that down. Key S&R identifiers. Okay, key S&R identifiers. One, you've got the bouncing, the reactions. Bouncing, reactions. Second of all, support and resistance. So that means somewhere support has become resistance. And 3, momentum.
Now, there are many other techniques that can be used to help identify significant support and resistance levels in the financial market. However, they are advanced and outside the scope of these lessons. They will be covered at a later time in the education platform. But for the focus of this video, the key identifiers are reactions and bouncing, support and resistance, and momentum. So now that we've got this conceptual basis and understanding, and we've taken notes on what we're going to be looking for, we can switch back over to the markets and identify how this really works. All right, so here we are on the Euro Pound 2-hour time frame, and our goal, our objective, is to learn how to identify support and resistance levels in the financial markets so that we can learn how to trade them and ultimately make money, put money in our pockets. So let's start at the top where we have our simplest example of a support and resistance level. Here we have a rejection. Here we have a rejection. Here we've got rejections, 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 and rejections. So let's place our support and resistance line, our horizontal support and resistance line, right up here. See here, I've got it labeled major support and resistance, major S&R. And we've seen how many rejections here? 1, 2, 3, 4, 5, 6, 7, 8, roughly 8 rejections. That's a lot of rejections, guys. That's a strong signal. So here with our key support and resistance identifiers, we can mark off number 1. We see plenty of bouncing, plenty of reactions from this level. Now, do we see that this level acts as both support and resistance? No, we don't see that. We actually do not see that. In the examples that we have here in this market in front of us, we're only able to see that it is acting as what? Resistance. We don't actually see any instances of this acting as support because price held here indefinitely. Now, we may see at a later time that price breaks through this level and that this level then turns to support. But because we don't see that here, we can't use that to solidify and ensure ourselves that we do indeed have a significant support and resistance zone. So we're not able to identify number 2. What about number 3? Again, because we don't see price actually break through this at any point, we can't actually verify that it takes a lot of momentum to break through this level. We can assume so because it's been holding price so well, but again, we can't actually verify it. So even though this may appear to be a very strong level in the market, because you can't actually ensure yourself that it is a significant support and resistance because you don't have all of these identifiers marked off, you may want to hold back from trading it when price gets back up here because you don't know how it will react. You could very easily see price go right through this, and if you look to take a sell from here, you might lose. So let's take a look at another example here. Here I'm noticing that we had some peaks in the market right here, and then again over here. So let's see if we put a horizontal support and resistance line here, what happens? Okay, so we see some more information here. We reject again, 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 again. So same situation as above. There are a lot of rejections holding as resistance up here, which is of course nice to see. Let's just pull this all together and make it nice and clean here. And then let's note that we again have clearly resistance here. Now, again, we can mark off number 1 on our list because we're clearly bouncing, we're clearly reacting from this level. Now, the question is, can we mark off number 2? Does it also act as support when we breach? So here is our breach. Price breached right here. And if you notice, when price came back to this level, what happened? It found support each time. Not only that, not only did it find support each time, also over here, when we breached again, right here, it turned around and acted as resistance. So let's clone this. Let's bring this over here. Clone this again, bring it over here, and we have support. So for this specific support and resistance level right here, we are indeed able to mark off the second criteria. It does act as support and resistance. So did it take a lot of momentum to break through the level? if you zoom in over here and you take a look at this, you'll see that this candlestick right here, this candlestick was actually a pretty decently sized candlestick if you compare it to the other candlesticks around it. So let's zoom real in here. Let's zoom on in. Do you see the size of this candlestick compared to, say, this candlestick, or the candlestick next to it, or this candlestick, or this candlestick, or any of these candlesticks right off in here even? Okay, this was relatively a large candlestick. What that tells us was that it took a strong candle, a lot of momentum, to break through this resistance up here. Okay, so we can indeed mark this off of our list. So let's zoom back out here. Zoom back out here. So boom, marked off, and then number 3, momentum, we can mark off as well. So
I feel like those over a few of the last two.
That goes over the key 3 things that you've got to have. Okay, guys, are y'all with me? Yes. But it's all going over. But you gotta have that. And then when it breaks, you gotta have the momentum.
Hello everyone, it's Easton Harris here, and in this video I'm going to show you guys a method that's very helpful when identifying the general area of where your support and resistance zones should go. So here in front of me we have a candlestick chart. We have price displayed as candlesticks. Okay, now a real easy trick to get rid of some of this clutter and get a general idea of where we should be putting our support and resistance zones. If we go right up here, these 2 candlesticks, click this button, come down here and click line. And what this is going to do is display price as a solid fluent line. Now what the line shows is the closing price for this time frame. Every candle close, this line chart shows. And it gets rid of all the clutter, it gets rid of the wicks, and it makes everything very fluent. Now when doing this, it becomes much easier to identify these areas of support and resistance. So here on the line chart, I can very easily see that we have all these rejections here. I can tell that price has come up and has fallen. Price has reacted here. There's something here that keeps pushing price down. There's a level here, and it's very clear. It's a lot easier to see when it is in a line chart. But right here, we have our resistance. So with all these touches here, all these reactions here, we can take our line tool, and we can place a line here. This lets me know that there is resistance, a support and resistance zone within this general area we have right here. Now, they are zones. It's going to get a little messy even on the line chart, but you can see it's very easy to tell where these areas are located. It's not precise, okay? We're going to get into the precise stuff in the next couple of videos, but this is a way to spot the general area where you should be looking to draw your support and resistance zones, okay? Now, moving forward, we have reactions here. Price is bouncing from this level. We have a level here that is acting as support all through here. So let's label this support. This is our area of support. And it becomes much easier to see, much more clear on this line chart. Now we can come through, take our line tool, and we'll try and line this stuff up as best we can. Now to get the right area, We want to look around at everything. There's some slippage here. It's not going to be precise. You know, we're gonna really perfect these in the up and coming videos and make sure everyone knows how to be very specific when drawing their support and resistance zones. Okay, but if we look over here, we can also tell that this support here, this support and resistance zone, also has reactions on it from a resistance standpoint. If we look over here, we can tell that this support we have drawn along here has also acted as resistance. Okay, this is just more confluence that we have the right area marked here. We have another resistance. Now, following our support and resistance line, the bottom one here, we can also see that it held as support yet again, right here in this area. So again, we have this support and resistance zone acting as support here. This is what we're looking at. This is what we want to see. Our top resistance line up here also acts as a support over here in these areas. We can see support here, here, right here. And that's what we want to see. We want to see reactions on both sides of these levels. And it's clear that we do have that here. Now, what we're going to do is we're going to flip back to the candlestick chart and take a look. All right.
All right, guys, did y'all see what he did? He switched it to line chart to actually draw out the support and resistance. Then he switched it back over to candle, okay? So when you guys do your homework tonight, that's exactly how I want you to do it, okay? We've got one more video, and we will be done with support and resistance, okay? Yeah, great.
Welcome everyone, my name is Easton Harris. In this video today, we're going to be talking about support and resistance, of course, but we're going to be talking about the correct way to draw your support and resistance areas. And there's only one single way to draw them if you wish to utilize them in your arsenal when taming the financial markets and becoming a profitable trader. The big secret is that your support and resistance areas must be drawn as zones. No ifs, ands, or buts. They have to be drawn as zones. That is the only way that they work consistently. Up until this point, we showed you guys the concept of support and resistance using solid lines. Now, price does not respect such a specific point within the market. Price fluctuates all the time, and there's not going to be a set specific point that the market respects every time. There's a general area, and we have to find that area, fine-tune it, find the very specific parameters of this area so that it can be used consistently and profitably. Now, in the previous videos, we were using support and resistance as lines just to demonstrate the concepts of it. But here, I'm going to show you how that fails. I'm drawing out this example right now, and we're just going to take a look at how this played out. Now, if we want to put a resistance here, here are our reaction points to a resistance. Okay, we can tell by these reaction points that there's a resistance in this area. Okay, now if we take the line tool and we use this middle peak here, because it's in the middle, and it's just right there in between both of them, so that should work. If we just use this to label where our support and resistance area is at, this will fail. What will happen is price will come through, break this support and resistance area that we have from here, and retest it. And we're going to talk more about this when we talk entries. But it's going to retest. You're going to enter for a sell, and you're going to lose. You're going to lose money. 7 out of 10 times you will lose money on a support and resistance line. Now, these are meant to be drawn as zones. Okay, so to avoid things like this getting faked out by the market, to avoid this, you have to draw your support and resistances as zones. So if we are looking at these peaks here, if we're looking at these peaks and we want to draw our resistance zone, we're going to start at the very edge of where this reaction originated from. So I'll move this so you guys can see clearly. When drawing the support and resistance zones, let's look at this one for instance, this area right here. We need to figure out what caused this reaction in the market. At what point within the market caused this bearish reaction? And we need the very beginning of that move. We need the very edge. Okay, so if we're looking for the very edge of this move here, I'll pull out this line, this dotted line tool. It is right here. This is our bottom parameter for our zone. And it is the very edge of this move. Okay, guys, right here. Now, for the next reaction, okay, we need to find the other side of our zone. We need to find the top portion of our parameters here. So, let's grab our dotted line and let's check this. Okay, this is where this move originated from. This move, this bearish move, originated from this point where my dotted line is. Now, if we look to the right at this peak here, we need to figure out where this move originated from. Now, this move originated from a place that was just a bit higher than what we had from the peak to the left. So we're going to move our boundary line up right to the edge of where this bearish move began. And this is how we get our parameters for these zones. Okay, so if I get rid of this, if we pay no attention to this one right now, when looking at these three bearish reactions and searching for this resistance zone, you have to make sure that you have the bottom boundary and the top boundary. So when we do this, we have all three reactions in our zone. All of them are accounted for. Now this one just happens to be within our zone. And that's great. That's exactly where we wanted it to be. We want these reactions to be accounted for. So we have our bottom boundary, we have our top boundary. Now I'll move this line over here so you can see how we get it. And this becomes our support and resistance zone. Okay, now what that is going to look like now, instead, if y'all remember, we had a line through here that didn't work so well for us. Okay, that was when using the line. When using this zone and accounting for these reactions, this becomes our zone. And now that we have it drawn like this, and we're not using this line anymore, this move made sense. This makes perfect sense. This whole move down to the support and resistance zone, and then the reaction off of it, this bounce makes perfect sense now. We weren't trying to sell this anymore. We were trying to buy it, and we made money. You know, this is how support and resistance zones work. This is specifically how you draw them. Now we're going to dive into the chart, and I'm going to show y'all exactly how to do this whole process within a real chart. All right, guys, so here we are, and we're going to walk through drawing this resistance area correctly and very precisely, okay? So we have an area where we see these bearish moves come into play here. So I know that there's a resistance up here, but I need to find it. I need to figure out how exactly I'm going to draw my zone, and I need to figure out where these moves originate from. Okay? Where do these bearish moves originate from? Now, over here to the left, we have to find our resistance zone. Where is our zone exactly? We have to start with what the market is giving us, and we have to look at where exactly these moves are originating from, these bearish moves. So if we come in here and we zoom in a bit, this move, where does this move originate from? What is the highest point that price went before it kicked in to this bearish move? And that point is this wick right here. This wick is going to be where this bearish move originated from. Where did this move originate from? Here's our bullish move. How high did it get before price went bearish? It's right here. These are our points within the market. These are what we want to take note of. These zones are very specific, and this is how they need to be drawn. I'm walking you through very slowly how to do this so y'all understand exactly how to do it. Before long, you guys will be so fast at marking these up. This is where this move, this bearish move, originated from, right here. Now this move, where did this move originate from? Right there at the wick. We had a small bullish move, wicked up, went bearish. These are our points that we need within our zone. Okay, so if we take a second and we just very precisely mark the edges of these moves here, we just mark them. We're going to get rid of these boxes so you guys can see clearer, and we're going to get rid of the arrows now. All of these reaction points need to be in this zone. Okay, so what this means is we need to find our lowest reaction point, which is this line down here where this wick is, and we need to draw our zone to the highest reaction point to find that top zone boundary. And this is our zone with all of our reaction points included. No one's left out. It's very solid, and all the moves make total sense. This is our resistance zone. We're going to do the same thing to our support down here. There is a support, so let's mark that up. So for support, we need to figure out where are the bullish moves originating from? Where does this move come from? Where does it start? Where does it originate from? Where does this push originate from? We're going to find the parameters of our zone looking for where the market is creating these bullish moves. So what are we going to do? We're going to come in and we're going to figure out exactly where did these moves start. What was the furthest point price went before it reversed and went bullish? And it's going to be the wick edge of this little green candle here. right here. This is very specific. Okay, guys, I told you this would be very specific. Where did this move originate from? The furthest point is the edge of that candle, the wick. We're going to use the wick on that one. Where did this move originate from? The green wick, just before the move, right here. This is where our parameters are going to be set, and we're going to make sure that they are all included within our zone. All right, so let's come in. We're going to take this dotted line tool, and we're going to mark the very edge of this move. Boom, right here. We're going to mark the very edge of this move. It's a little higher, right here. And then we're going to mark the very edge of where this move originated. And now what we need to do is include all of these lines within our zone. So if I take my bottom line, my furthest parameter to the downside, and drag it to the top line, that's going to be the zone that we use. Now I'm going to clear some of this off so you guys can have a better look at what's going on. This area right here is our support zone. Now I was really zoomed in. I wanted you guys to have a complete understanding of how this is done correctly. All right. This is our support zone. And look how how price reacted to it. Support then turned to resistance in this area. Zone was very well respected. This is how you draw your support and your resistance zones. This is how specific you need to be. Guys, practice this. Practice this. Find out where these reactions are originating from and develop your zone. Do not be lazy when drawing your support and your resistance zones. That took quite a bit of time to do that, but I wanted to make sure you guys fully understand the correct way and the only way to do this if you want to make money using support and resistance zones. Practice this on your charts until you are comfortable. You should be able to mark these up in a matter of 2 seconds. Okay, I can mark these up so fast, it's not even a question. I want you guys to be better at it than I am. All right, so practice makes perfect. Get in your charts. Take the knowledge we are teaching you and apply it. If you're not applying it, you're not going to make money. I hope y'all enjoyed this video. I hope this provided an in-depth understanding of how to draw your support and resistance zones.
Okay, guys, so there you have it, support and resistance. Love the way that he breaks it down. What do you mean, what trade is he using? When you're marking it, when you're practicing, it doesn't really matter what currency pair. But I have already dropped in the E-Star Legends group and the Gurus paid members group your homework for tonight, guys. Homework number 1 is open up I want you to pick like 3 currency pairs, okay? I want you to pull the chart up on your Trading View account, okay? On your Trading View account. Go to line chart, and I want you to just draw basic support and resistance lines using the 3 rules. Bouncing off of it. At one point, support becomes resistance, and look for the momentum where it breaks, okay? I want you to go on your line chart on Trading View, like maybe 3 different pairs. Draw the support, draw the resistance lines, switch it over to candles. Then I want you to either screenshot it, take a picture. I want you to drop it in the comments of the homework post, okay? That's homework number 1. Homework number 2 is I want you guys, those same 3 pairs that you drew the basic support and resistance lines on, I want you to practice drawing the support and resistance zones, okay, that we learned about tonight. And then there's a second post in the group. Drop it in the comments there, and we will be looking at them, okay? So I know we went a little over an hour tonight, But I really just wanted to knock the support and resistance out of the way so that we could move on tomorrow, okay? Does anybody have any questions? It's bandaged up. You can still see the blood through it. It hurt. It was bad. Okay, guys, any other questions? All right, guys. So get your homework done for me, and I will see you in the chats, and I'll be checking your homework, and I will see you guys again tomorrow night. I love y'all.